Hello and welcome to this week's live weekly trade plan, where we go through the financial markets and we look to identify weekly and monthly levels of support resistance that we're going to be looking to use in the trading week ahead. But just before we begin this webinar, I would like to present a very exciting opportunity to you personally. So the Live Trade Room has been set up to offer traders comprehensive trading education, but most importantly, daily mentorship. So our traders can join us for 1 hour per day where we analyze the financial markets, we look to identify trading opportunities, and you can observe us trade our own live trading account. So the idea behind this is that you'll be able to get full access to our trade details but most importantly, our trading performance. So I'm delighted to say that we are currently accepting applications for places on our Trainee Traders Programme. Now please do click on the link below if this is of interest to you, and you can find out exactly what's involved and what we're offering. Now for a limited time only, if you are successful in your application, we are going to be waiving the fees associated with a place on our trainee programme. So there is zero cost associated with a place, and there is no potential for upselling or anything of that kind at any point. So this is a genuine opportunity, however it is subject to normal terms and conditions. So what we are looking for is genuine traders that are genuinely interested in learning how to trade the financial markets. So if this is of interest to you, please do click on the link below, do submit the relevant form, and one of our traders will be in touch with you over the coming days. So for now, relax, enjoy the rest of this webinar, and we look forward to seeing you soon. Bye for now. Hello everyone, very warm welcome to your live weekly trade plan. My name's Tim and I shall take you through tonight's webinar. Now today is Sunday the 3rd of December already. These weeks and months are ticking by very quickly indeed. For those of you that are perhaps new to this live weekly trade plan session, it's effectively a webinar where we focus on multi-time frame analysis, obviously whilst these markets are closed. Now it's important, this is effectively an important time because it can allow us to take stock of what is happening as far as price action is concerned. And I'll touch upon ever so briefly about the differences in different types of moves. You can have technical moves and you can have fundamental moves, and this session will be really good for you to identify and be able to clearly see the differences between the two. And I guess what's important to bear in mind is that no matter what your approach is to trading financial markets, it has strengths and weaknesses, but it's very important to identify what those weaknesses are. So if you're a technical trader and you get fundamental moves in the markets, like unless that move conforms with the style in which you trade the markets, you know, it's effectively sort of a weakness really, but it is something that needs to be embraced. It's not something to be frightened of. So we've got a very interesting session ahead. What we'll do is we'll take a technical look at weekly and monthly timeframes, and we look to identify the important levels, the important highs and lows, and the genuine levels of support resistance in these markets. And the idea is we'll be using these levels for the week ahead. So you're all very welcome. It's great to get so many comments from you also, and I appreciate many of you as well are joining us as well for the first time. So fantastic news. So it's great to have you all on board. Okay, so let's get straight into this webinar. Okay, so if we can start, as we always do, with our risk warning. Please do make sure that you're comfortable and you're aware of the risks involved in trading the financial markets at all times. Okay, so what is the importance of multi-time frame analysis? We've identified a number, and I appreciate for those of you that have been with us quite a while, it's just a bit of an introduction basically to this webinar. So what you can do is you can see more clearly what is happening and who is genuinely in control of the markets. Sometimes markets can move sideways for a prolonged period where you just need to be able to see that very clearly. And again, that is a benefit of multi-time frame analysis. Another reason is that the larger the time frame, the more important the level, genuine level of support and resistance can become. So if you identify a genuine level of support and resistance on a daily time frame, and it coincides with a weekly or a monthly level, then the idea is you can have some more confidence in that trade. It can also show you the important levels where a market is likely to move towards as well. So, if you do see, if your market is moving in your favor to the upside and you see a major level on a daily, weekly, and monthly level, then it would be a very wise decision to potentially look to book in profit at that point. Okay, so let's go straight through and have a look at the charts. So let's see what we've got. What I need to do is just slide it across onto your screen so you can all see them in there. Right, let's start, as we always do, with the dollar index. And what I mean by technical traders is that we've had a couple of, we've had two sort of mini breaks beneath our 92.58 level. And that is quite important because we can see on a daily time frame, if I zoom in a bit more for you, do we get a break? And what I'll do is I'll get up my pen as well. Apologies. I'll get this up on screen so you can clearly see hopefully what I'm talking about. We look at this candlestick in here and we decide to ourselves if this is the weekly low, and this is also coincides as quite an important level. So what this multi-time frame analysis session allows us to do is identify these lows. So we can ask ourselves, when we see this candlestick, I think it was last Tuesday, is that something that we can sell? Don't forget, if we get a break of this area to the downside, it might give us a nice opportunity to take this market lower. But we got a clearly defined rejection. I hope you would agree with that. And so far on Friday, the market was looking like it was moving lower. And that's why these weekly levels can actually become quite important, because the market has to work quite hard to break through them. And as you can see, over the course of last week, it's had a couple of rejections of this level. So we know what's happening with this market. It's just, for all intents and purposes, we are virtually at the same price as we were this time last week, should I say. So we need to bear that in mind. So we've effectively had a little pullback for the first few days of the week, followed by a little bit of a reversal and a little bit of indecision now. And I'll touch upon the dollar very, very shortly. So unfortunately, we're seeing that across the board, apart from a couple of, a few different markets for some slightly different reasons. But we have our weekly highs, which is the 1943. And it's become a level of resistance, preventing price from breaking to the upside. We can see this very, very clearly. We've seen the rejection. So it's not to say that price won't break this level and continue higher. We're just knowing, and what we're using now is we're paying a little bit more attention to this level and seeing if we get a close at that level, then we're likely to get a push, a nice push up to the upside in this market. Now, this level here is really, really quite significant. What I'll do is I'll take this off so you can see what I'm talking about. And same with the dollar index, of course. But when we look at this market, in fact, let's go into the weekly timeframes so we can see it a little bit better. So now we're talking about sort of a break above these levels. I mean, it became a little bit of a no-brainer sell to us. We tried to sell this on, I think, 3 different occasions to the downside. So there's still every opportunity that this market could still head lower. But you can see the resistance here around the 114.5, which was actually our target. We were very close to hitting our target, but unfortunately not quite close enough. So what we're seeing is this market attempting to push back up to 120, and you can see the importance of this level holding up the market quite considerably, and that's quite difficult to do. We're talking about one of the most traded markets in the world, and when you see these levels, you've got to sit up and take note. So if we get a little break of this market up to the 2094 level, and we get a confirmed break of that level, we're then talking about from a technical perspective, quite a sizable move to the upside in this market. And I'm just going to convert that to our blue. So it's a level of support and resistance. So that's roughly the kind of level. I mean, we'll look at it in a little bit more detail if we get a break above that 90.94. So we've got a bit of an indecision, a spinning top candlestick up here with a bit of a bearish tint to it. And this is on a weekly time frame as well. So let's take it over to the monthly. What you have to obviously bear in mind with the monthly is the fact that we are only 3 days in to this month. So we saw a 6-month move to the upside, followed by a 2-month move back to the downside, followed by a little breakout of this ascending level. And now the market has a couple of decisions to make. So do we get a little bit of a sell-off? Or do we get this market sort of breaking this weekly level and pushing higher? So with that in mind, let's go back to the weekly level. We're just going to raise the weekly level just marginally. What we might do is raise the weekly low as well. So I'm going to take note of the high on this market. Let me bring this up a little bit for you. So for those of you that are perhaps new, you can look at your data window. What you are able to do, and it was just a couple of conversations we had last week. Many of you might have your data window sitting like so, which is fine. I mean, there's nothing wrong with that. But what you can do is drag and drop it just bottom left, and then you can manipulate it up and down as you need. So it's quite intuitive, MetaTrader 4. So the euro dollar. So we're just going to work with these weekly highs and weekly lows, and it's just that principle behind knowing that a market needs to work quite hard to break above a series of daily highs, and then you build that in with a weekly high. It can assist you in your decision making, let's say, during the week. Okay, so let's work with the high. So it's 1960 to the upside. So as you can see, just a tiny fractional move. In fact, we're talking about 17 pips, which is absolutely nothing. But I do want to take note of the low as well, the 1808. And I'll just change this in here. So 1808. Now, it's really interesting to have experienced what is happening with regards to the US dollar and the craziness, which was Friday. And I'll touch upon, I suppose I'll speak a little bit more about it when we start looking at the indices. As far as the dollar is concerned, obviously we've experienced continuing pressure, a weakening dollar. Now this candlestick could be quite decisive. We'll have to wait and see on that. So we're just going to work with these levels, because when I take this over to the daily time frame, you can see that there's a little bit of sort of consolidation going on in here. The price is currently between those two levels, to the high and to the downside. So you would just it would be a logical conclusion to suggest that a break above 1960 could constitute an interesting buy. An interesting buy with a caveat, which is that there is resistance above that. So if it's a small candlestick break above, you might want to try and trade it up to 2091. If there's a large one, you might refrain from doing so, because you're very likely to get a little bit of resistance around this level if this market does break higher. Now, what we do have beneath the low is a potentially a little bit of room, let's say, to the downside. But the US dollar definitely has some tailwind to embrace and to take on board. So all we've really experienced is a nothing week for all intents and purposes. It's just pushed lower and then reversed a little bit. So technically, not much to work with. Now, the one caveat, and this is one of the major markets which has seen a pretty significant fundamental move. Now, we were looking at the highs last week of 33.58, and we were potentially interested in a break above this. Monday's candlestick produced this rejection. So we were looking at this chart going, right, okay, well, could this level now be a little bit of resistance, and could we get this price rolling to the downside? The answer to that question on Tuesday was absolutely, before a bit of fundamental news came out regarding the Brexit negotiations, which is a fundamental part of phase one, is to agree on the divorce bill. And you know, what we saw was this market. Let me show it to you on a smaller term time frame. So we'll go back to, which was Tuesday's candlestick on the 28th. So let's look at it on a 15-minute. So we'll just slide this chart back to the 28th, and I'll just show you this price action. So there we go. So this is the 28th. The market was drifting lower, and it was quite late in the evening. It was about 5:30, as you can see up there. We had a massive explosive move to the upside after the market had been sort of grinding lower for pretty much all of the day, and that was wiped out pretty much in 45 minutes. And the market just kept progressing and pushing higher, as you can see. So that's the backdrop. A fundamental move from a technical perspective. Bit of a nightmare situation, and one that we were looking at from a technical perspective, and with all honesty became there was some very, very interesting intraday moves actually technically, but from a daily candlestick perspective, yes, the reality is this market was going to move higher. It had a couple of opportunities for a bit of resistance in and around these levels. So it has pushed higher, but it was based on a kind of a fundamentally driven movement, and the technicals didn't really stack up for us to sort of want to get into that. So that was one of those trades. I look at the US stock markets just ever so shortly. I want to fly through the rest of the. So what we'll do is we will actually change these levels for the pound dollar, that is, and we'll work with these highs and lows now, because you can see the low of this market, which was our significant level of support, 32.23, and that was exactly the price. 32.22 was exactly the price that this market rebounded from, having been sold off all day long. So it is funny how these prices and these levels do stack up. We do have a minor level of 34.75, and look where this market is closed on, 34.76. So we're talking about a pip difference. So again, if you look at the 33.22, you can see that this market closed at 30. The close. Sorry, it was the open, excuse me. That was the close up here. The open 33.22, and the market opened at 33.22. So a very interesting technical week there. You know, looking at these rebound levels and the close and the open. So what we have is, we're going to take note of the high of this market, which is the 35.48. So I'm just going to move this level higher. 35.48, just to the upside, and this level becomes quite interesting now to the downside. The 32.22. So let me put this level in, 32.22. So that's just hidden behind that level of support. So that is the pound on the weekly level. So let's fly through and just ever so slightly. So as you can see, not an awful lot has happened here in the dollar yen. So we just got slightly higher highs, slightly lower lows. So we're just going to work with those. So 112.86, 112.86. And what these levels can do is prevent you from committing your capital when you get these sort of indecisive sideways moving markets. So, okay, it's a bit frustrating, and we've been kind of sort of saying really, patience is the order of the game right now, and that's not what traders want to do. Their natural instinct is not to be patient at all, actually, and it's to be very aggressive. But obviously that doesn't necessarily end well for traders. So there's no doubt about it. A little bit of patience and work with this low 110.83. So I'll just change this 110.83. So these just help our decision making. So clearly a break above 112.86 might constitute an interesting buy trade, but you will come into more resistance around the 114.50 level, and likewise a break below the 110.83. You're likely to find some support around 108. So hopefully fairly self-explanatory. So we're currently still in the Aussie dollar, but our stop loss is in a position of, it's actually a profitable exit. So we're booking a little bit of profit. Like, what was interesting to see the last few hours of Friday's price action, you can see the price just come off a little bit. So that just means that this market is kind of resisting breaking higher. So there's every chance we could still get this market rolling down, especially if we get a little bit of strength coming back into the US dollar. But it's going to be interesting. So with that in mind, we can, I'm just going to change the levels ever so slightly. So we're going to work with the low of the 75.30 to the downside, but we're definitely just going to move up this high 76.43. So 76.43. So we're just going to move that high up just a little bit. Right. So this is another market that's been moving sideways. So it's very, very visually easy to see what is happening with this market. And for us now, we're not deciding to sort of get in and out of this trade within this range. We let price action to do what it's going to do. We know what the market conditions are, which is that it's consolidating. So we're going to sit on the sidelines and just watch and see when if we get a confirmed break below 87.46 or a break above 90.31, would we only then become probably very, very interested in that trade. But certainly nothing to trade just yet. The same with the Euro yen. So we're just getting this market breaking above the highs and the lows. So again, market conditions moving sideways. We're not in a trending pattern like you've seen previously. We're now taking a pause, moving sideways. So a break above 134.48 to the upside, or 131.15, which is the weekly low, to the downside. So we've just had a marginally improved bullish week. Basically, that's all we've really seen. But the conditions very clear to see, sideways moving market. So just sit tight. Now, the interesting markets have been the US indices. We posted a couple of articles actually on Friday. One which was about the kind of a review of the week, which is that the US indices are still marching to the upside, and the expectation really of Trump's tax plan and the potential for that being approved, and which has kind of been the agenda really for the march really to the upside, is that Trump is very likely to improve the conditions, the economic and business environment for US corporates, and that's why we've seen these markets continue to plow to the upside. However, Friday's candlestick was very, very interesting. There was, again, we followed up with a post that actually the price action obviously began to turn towards the latter half of Friday's price action, which was quite bullish, and then it turned very, very bearish very, very quickly, as if something significant had changed. And lo and behold, Brian Flynn, who was the US Treasury Secretary, unless I'm mistaken, but he was a part of Trump's team. Actually, during the he then became a part of Trump's, I suppose, back office, really, and but he was certainly involved in basically Trump asked him to speak or to have some form of discussion of one kind or another with the Russians. Now, the problem with that is, and he's now willing to testify to that effect. So that's going to be a very, very interesting development, because, you know, obviously we're all fully aware Trump completely denies that. He says there's no truth in it whatsoever. And the problem with that is, if he gets found out to be, you know, obviously having discussions with the Russians about potentially becoming the most powerful man in the world, is a pretty incredible position to actually be in. And I'm sure there's many in Washington that would not, you know, would like to impeach or potentially hold him to account for that. And so it's going to be very interesting to see what happens as a result of that. I'm sure it wasn't what Trump was expecting, but it was interesting, and I want to show you the price action as well. So if we go into an hourly time frame, or even 15-minute, just to see it in all its glory. Yeah, this is the S&P. So in fact, there was a couple of other markets which I was going to show you in a little bit more detail. So the markets were quite happy to be sort of drifting higher. And this is a 15-minute chart now, and we've had a couple of back-to-back very, very bearish candlesticks. So we've had a pretty significant move around 26.48. Well, effectively down to 26.05. So a pretty significant move in a short period of time. But then there was some significant news out about Trump's tax plan, and basically the fact that it's been approved. You know, we very, very quickly saw this pretty significant turnaround. And then Trump came out and denied, and there was the White House sort of kicked in and sort of made all sorts of denials, you know, as they do. And what we saw was a very, very swift, very, very quick turnaround. How that transpires on a daily time frame is to see the market sell off, reverse, I suppose, above these previous highs. We have a weekly high last week was 26.02, and it was largely the level which this market or this price reversed from. And now we're back up at 26.42. So a major reversal, and it'll be interesting to see the open price with this market as well, to see if we do get a break of these highs around 26.59. Now, I suppose with the tax plan, it's what it's what investors have been sort of gearing up for the last, well, since Trump was elected. And I suppose the good news is that seems to have been approved to a great extent for the US business, you know, for businesses in the US, for them to actually benefit from a reduction in corporation tax from 35% down to 20%, which is it's a massive reduction in corporation tax. Now, if you listen to a lot of the analysis about that, I mean, there's winners and losers, there's pros and cons, but there's no doubt about it. You know, it would have a positive impact in terms of, you know, decisions that big US owned multinationals, you know, it's probably very likely to have a very, very positive impact on those companies, not necessarily on additional employment or for that matter, not necessarily with regards to increasing pay conditions and things like that, but certainly the potential for increased profits. So there's a lot of skepticism about potentially, you know, with the kind of growth that we're already seeing in the US, that perhaps it would be wise to just step off and perhaps not proceed with this right now, but to use it when, you know, when I suppose the economy needs a little bit more of an injection. But he's very anxious to get cracking with it. So as a result, what we've seen is a pretty significant rejection to the downside, and this sort of lends itself to the buy the dips approach. You know, it's still in the US equities. Now, how long this will last for, obviously no one knows, and it just keeps grinding higher and higher and higher. So what we're going to do is we're going to just take note of the highs and the lows on a weekly time frame. You can see this humongous move, and it just keeps moving higher and higher. So let's work with the high. So I'm going to take note of the high, which is 26.58. Just going to move this to the upside. 26.58, significant move again, as was last week. To the downside, 25.96. 25.96. So that's the weekly levels, and you can see how prices behaved and reacted in and around those levels. And I suppose Friday's price action was just a complete nightmare. Okay, so Connor, yeah, so Connor, you're making an interesting point. The dollar yen chart, you could potentially expect that it would have been dumped to the downside and perhaps gold to the upside. Yeah, quite an interesting position. Now, we did get a significant bit of volatility as well. So we did, as you say, we did get that kind of initial reaction. Oh my God, is this a flight to safety move? Should we take funds out and put it into the yen? Which is a flight to safety, which is exactly what Connor is suggesting. And the same again for the gold market. But then things sort of normalized fairly quickly. And we just got a significant reversal even on that daily time frame. So yes, you're correct. But then with the tax plan, you know, that's a major fundamental sort of move and shift. There was lots of thoughts and considerations that, you know, there'd be lots of frustrations about getting consensus on a move like that, which has now seemed to materialize. So that is actually pretty good. So we've just seen sort of a rejection to the downside as a result, and you know, kind of the same again. Although we've got a spinning top, this dollar index can still be decisive to the upside or to the downside. But we're just gonna reserve judgment, I guess, more than anything, Connor. But yeah, a couple of very good points. So on that note, I just want to just show you what happened to gold. So you would have said, or you would have initially anticipated when the news come out for the gold market to be flying higher, which is exactly what happened. But then lo and behold, you know, we've seen the back off as well in the gold, and we've seen a pretty significant reversal in that. So what we're likely to see is that if the US stock markets continue to move higher over the coming days, you're likely to see the gold market and the US dollar move in slightly opposite directions. But you know, this just touching upon the gold market while we're on it, the highs of 1305 and the lows of 1260 still remain intact. So we can quite clearly see that we're getting this grinding price action actually on the gold market. So we've actually had a break of this level, but then we've had this sort of crazy little up and downward price action. So really, if in doubt, kind of stay out, and we have our weekly highs and lows, which prevent us from getting into trades like this. We were anticipating potentially the market to reverse off this level, but bearing in mind sort of price action which has come before it, even if we saw this selling candlestick, you know, what we've seen on the previous momentum to the downside is that that market was bought back very, very quickly indeed. So even 3 days ago, when it looks quite bearish, do we have major confidence that that market will continue lower? Not necessarily. Of course, the markets can do what they want to do. They don't need to sort of comply to us. But we have seen this market move lower, which was quite interesting to see. And then we've had a little bit of a rejection the following day. So working with these levels and allowing the larger time frames to guide us just a little bit just enables us to just stay out of harm's way. So that's the gold. That's the gold market. Yeah, okay. So I can see some of you making a couple of comments as well. So that's absolutely fine. Patrick, I'll come on to your question in a minute as well, if that's okay. What I'd like to do is just go back to the S&P. The S&P 500. So we've got these weekly highs and weekly lows, 26.58 to the upside and the 25.96 to the downside. The same situation with the Dow Jones. So if we go over to, and don't forget, these markets are all-time highs, which are just very, very difficult markets to trade. So what we have to the upside is a massive bull candle, 24.326. 24.326. I'll stick that level in there. And just we'll work with the low as well to the downside, which is actually quite far away, 23.47. 23.47 in here. I think that's the level. Okay. So that's the level there in the Dow Jones, just flying through the FTSE. Yes, we have had a break to the downside. Are we looking to sell the indices just yet? Unfortunately, the answer is no, not just yet. We just need to see some more. A lot of this rejection is very much pound related anyway, if we're talking about the FTSE. But you can see that this is a major level of support, 72.76. It become a turnaround level for Friday's candlestick in terms of the low. The low of this market was 72.76, which is exactly this level, and you can see how often it does hold up price, both to the upside and to the downside. So it is an important level, and we've had a bit of a rejection off that level with this market pushing higher, largely because the pound dollar started to sell off a little bit on Friday. So we've got this inverse correlation going on. So we're still, in terms of a policy, we're still looking for potentially buy the dip style trades with a lot of these markets, except the European markets are beginning to pull away a little bit from the US markets, which is there've been a significant correlation between all of these global indices, and there seems to be a sort of a separation of that correlation right now, which is just quite interesting in its own right. It's probably the prelude to the fact that there's been a lot of consensus by a lot of central banks over the last number of years, and it looks like that consensus could be just sort of looking to just move away from each other a little bit. Looking to increase rates and things like that, and quantitative easing, and there's a whole range of other factors as well. So that's the FTSE 100. So looking at this on a weekly time frame, So you can see, look, we're at, we're kind of, in terms of this market. Let me have a look at it on a monthly, and you can see, hopefully. So this is what we're looking at with this market. So we are very, very close to all-time highs. So I suppose the recent low is quite an interesting level. If we get a break of that, we could get a really nice, significant push back to the 70-40 level. That would definitely be on the cards. But we kind of, if we're selling these indices, we kind of need to see something shift, something change. And right now, we're kind of not seeing that from a fundamental perspective. But we're still going to work with these highs and lows. So the high of this market is 74.72. 74.72, and you can see the rejection of these levels as well. So, are they markets that we want to be piling into? Not just yet. We do want to reserve a little bit of judgment on some of these. 72.76. So 72.76. Those are the weekly highs. It's quite a large range now in the FTSE. But if anything, don't forget, if you're out of the markets, you're not committing capital, especially when some of these markets are kind of giving you quite sort of messy price action, let's say. So we've had a look at this low, the 62.90 level. Has there been an opportunity to sell it? No, there hasn't. It looks like that we might have got that on Friday before we got the incredible reversal once more. So again, it's threatening to break to the upside, didn't quite happen. So we're just going to work with these weekly highs and lows once more. So 64.28, 64.28 to the upside, and to the downside, 62.45. Excuse me, 62.45. So those are the levels there. Everything remains unchanged. We've just got this consolidated market. So the highs above 13.05 and the lows are the 12.60 level. So we'll be looking at those levels very, very closely. And to give you a bit of a weekly snapshot, not much has happened to price really over the last 6 weeks. 7, 8, 9, 10 weeks potentially. We're still sort of within this range. From a monthly time frame, we're sitting in a pretty long-term range. So that's the backdrop behind our decision making. Crude oil, we do expect this market to start squeezing higher, but as you can see, let's have a look on the daily. So we've just had the market rebound quite nicely off of our level, the 59.02, which is the weekly level from last week. And even Friday's candlestick threatened to break it, but then came off and reversed a significant amount. But we are, especially with consensus from OPEC and non-OPEC countries, which regarding the extension for the restriction to the supply of oil. So you would think that would be fundamentally quite positive. But for all intents and purposes, we're going to have a look at this level very closely at a 92.05. Okay, so the 10-year note, just the last one, guys, before we finish. For other reasons, we did get a break at this level. I mean, we got a pullback, probably a 1/3 pullback on this, which just makes you feel a little bit uncomfortable. But for kind of other reasons in other markets, it became there was a couple of elements which became sort of issues for us, really, I guess. So we decided to, because we were in a position where we couldn't make a definitive decision on it. ultimately, we do expect this market to potentially squeeze down to 122.60. We've just looked at a price action that's came before it, and every time we get this little break, we get a significant pullback. And that's what we saw on Friday as well. So just going to sit tight on this one. But what we will do when we look at the weekly levels is we'll just move. We can leave for one more week. We shall leave the high of 125.44, and we'll just move the low, which is 123.91. 123.91. Okay. So those are, for all intents and purposes, our levels. So on that note, guys, that kind of wraps up. And to just kind of conclude, there was a couple of technical moves. Sorry, there was a couple of fundamental moves in the British pound and also the US stock markets with a crazy day on Friday. So that's the backdrop going into this week's trading, which is for us to exercise a little bit of caution. From many of the other markets, we've really struggled to break weekly highs and lows, and we've often seen quite a considerable amount of kind of sideways moving price action. So it's going to be interesting to see what happens for the remainder of December, because December, I mean, it does depend on what has happened over the course of the year in terms of what December is historically like. What we have had this year is a significant devaluation in the US dollar and an appreciation in the US indices, for huge chunks of the year, and it's still continuing as we speak. So that lends itself to an interesting sort of dilemma. Those that have traded those markets, you're talking about your institutions now that have traded those markets all year long, would they be interested and willing in committing any more capital in the last couple of weeks of the year? Probably not, even though this market is very likely to continue to move higher. So we'll just have to gauge, and maybe a little bit of caution is required. We really don't know at this stage. So we're just going to stick to our sort of technical principles and look for opportunities on that basis. And if we see those opportunities, we'll take them. Of course, we will. But we can kind of trade the market conditions in which we're operating. So so that just about concludes this particular webinar. I can see a few of you have posted a couple of questions, so I'll get over to them just ever so shortly. Feel free to follow us on Facebook, Twitter, and LinkedIn. The details are there up on screen. And if you do have any questions, kind of outside of this webinar, then feel free to email us at support@TheLiveTradeRoom.com. So you can, those of you that are perhaps new to joining us, you can access your chat box on the top right-hand corner of your screen, and feel free to post whatever questions you wish. So just going back to a couple of questions then. So Patrick, you've just alluded to the limited amount of funds that you have available, and you're just asking the question, kind of, is there a strategy that can be used on a lower time frame? So I suppose there's a couple of aspects to that. Yes, I suppose everything can be replicated, and we do have a few of our traders that do apply the basic principles, Patrick, on smaller term timeframes. The smaller time frame you go, the more participants they are, the more automated operators you'll come across, the more volatile the markets are, and generally the more difficult it is to trade. So what we're firm advocates of is learning the larger time frames first, get a handle on big picture sort of views, and then once you've got a significant amount of experience under your belt, to then go into lower time frames. Now, that is very much the opposite of what most people's experience of trading the financial markets is. And the problem with that is they commit far too much capital. They don't really know and understand enough about even that particular time frame, the volatility of it, the others that operate within that environment, and it can become very, very difficult, which is why you often find a lot of traders chopping and changing their thoughts and what they do and how they conduct themselves, and it's just because it's an environment for experienced traders. So we do find the daily time frames, you've got a lot of time to think and to strategize and to almost make nice, calm, considered decisions, whereas you go down into those lower time frames, and I appreciate you referred to the amount of capital you have available. That shouldn't really impact you. What it will impact you is in terms of the return that you want to see. But we would certainly advise, I don't know how much experience you have trading, Patrick. Have you got a significant, like, would you have a couple of years experience under your belt perhaps? Maybe you could post that and just let me know. So yeah, Connor, you're just asking about the differences in the colors on our charts. And yeah, look, just to elaborate, so what we have is, I suppose there's a couple of lines in here that potentially, when we get close to those levels, we see how important they are and how they stack up, and occasionally we can deliver them. So just from this, let's just focus on these 4 lines here. We have a weekly high level, which is the monthly. It's the weekly levels. Happens to be a monthly level as well. 125.44. So that's just indicating that that is a level of resistance to the upside. We do have 2 grades of lines. So we have our thick line, which is a really meaningful, fairly important level, and then we have a minor level, let's say. So thickness, thick blue, more significant, light blue, or a thinner blue line, let's say. It's still a level of support and resistance, but potentially a minor one. And again, like with all these levels, the actual price of these levels is not ultimately the most important thing, because you want to see how price behaves around that level. So, if it breaks and it closes considerably above it, you would say, right, well, that's a significant sort of bullish bit of price action. But often they provide, rejections around those levels, or you can see how price reacts eventually. And again, this sort of builds into Patrick's sort of questioning as well, is that we can cancel out buying these markets, because we can see that the weekly high is in there, and on a daily time frame, if you get a couple of rejections or the market bounces off those levels a couple of times, and then you can often look for like structural failures to the downside and things like that. So there just can be, we do try to make it clear as well, Connor and everyone else, that these are not the levels that need trading. That decision making can often come within our daily live trade room. So, and the reason for that is, let's say if we decide to buy this market just above 124.77, we would do so knowing that there is potential for this market to come into a bit of resistance around 125.30, and if not, then we'll have a weekly level just above it. So the idea is not necessarily to buy a market below, a couple of significant levels, and then you've got your daily levels in there as well. So there's you wouldn't be looking to buy below this level. You'd be looking to buy above it and sell below it. But in terms of the accuracy, in terms of entry and exit, would very much depend on the candlestick and the, I suppose, the decision-making processes that go with it. Green high, red low, blue time significant. Yeah, so we're talking about significant levels of support and resistance. And when price gets close to those levels, we do want to see how significant that level is, and that can enable us to make some decisions. So these are just levels that have built up, over time. So let me see if that was useful. So Patrick So you're still learning. You've got limited experience. I would really recommend you to, I mean, the amount of capital you have available doesn't, it doesn't require you to decide whether you trade a daily time frame or whether you trade a 4-hour time frame. So really, trading shouldn't be about that, especially when you're starting out. So if you do have limited capital, you can still trade smaller percentages of your account on a daily time frame, and really kind of learn the skills involved, even the psychology. The psychology of how these markets operate is of huge importance to traders. If you do take 2 or 3 or 4, back-to-back losing trades, it's important that you build and understand the resilience of being able to deal with that. And it's not easy. It's counterintuitive. It doesn't quite feel comfortable for traders to, normally, if you take a series of losing trades, you throw your toys out of the bathwater and you start chopping and changing everything you're doing. And that is unfortunately the experience of most retail traders. They could have something really good if they continue to stick with it, but they keep chopping and changing their approach, and they do the opposite of consistent trading. And as a result, very, very difficult to get a foothold of this market if that is your path. So let me see. My pleasure. Yeah, those of you that are, I suppose there is sort of minimal differences in terms of accessing some of the markets between core spreads and AvaTrade. In fact, I'm fairly certain that the 10-year notes are there. No, they might not be on core spreads, but those markets will be coming online sooner rather than later, from what we're told. So I suppose there's many other markets on both that we can trade. So you might just experience some of the government bonds just for the short term. Hopefully that makes sense. My pleasure, guys. So listen, on that note, I don't think there's any other significant questions coming in. So what I'd like to do is to wish you, make sure you have a good evening for whatever's left of it. Thanks very much for joining us. It is being recorded and will be placed in your members login area, so you'll find it in there within the next hour or two. So on that note, great stuff. Yeah, please do tune in during the week, guys. We could have an interesting few weeks ahead. I mean, let's hope that that's the case, and we can kind of take it from there. So just kind of one day at a time. It's going to be very, very interesting to see what happens now with the US indices and the US dollar. So definitely some interesting price action ahead, no doubt. So on that note, I'd like to let you go for the evening. Thanks very much for joining us. Do take care, and we do look forward to seeing you all during the week. So from everyone here, bye for now.